Ladies and gentlemen, welcome back to the channel. It is that time to give you guys an update on what is happening with AMC stock as well as this market, because you're getting more economic data that came out this morning that is pretty negative. So if you're waking up and you're finally seeing indexes that have been going parabolic, like the NASDAQ down almost 1%, well, this economic data might be able to explain it. You are also seeing a bit of a relaxation on the AI hopium that we have seen as of recently. So we do have some developments for you guys. All in all, this is a positive development for AMC stock and seeing a collateral crisis, margin calls, and a short squeeze. So let's get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So number one thing I want to talk about that happened today is you got the Chicago PMI for May. This came in at 40.4. You were expecting 47.3. So a slowdown in the PMIs, kind of showing the economy is slowing down as well. Now, the big story of the day today is the JOLTS job openings. This is telling you you are about to get at least one more rate hike. The JOLTS job openings for April. Are you guys ready for this? You were expecting to see 9.2 million job openings. There is 10.1 million job openings. That's the actual number that came out. So about 900,000 more job openings than were expected. Now, what this means is there's a lot of people still trying to hire. That's the bottom line here. Lots of people trying to hire. So that means the Fed has more work to do. And we're going to hear from the Fed later on today, 12:30 p.m. You are going to hear from Fed Harker, Fed Jefferson at 1:30 p.m. And then you're going to get the beige book that comes in at 2 p.m. Now, what the beige book is, essentially, it's kind of what's going on with the economy in different districts. You kind of just get this report of how the Dallas area is doing, how the Chicago area is doing, how the Philadelphia area is doing, the Atlanta, the San Francisco, and different regions are going to say different things. And you just want to see if there's any changes there. Doesn't typically give you the craziest move in the markets, but it can, especially in this kind of market that we are dealing with. So bottom line here, you got bad data for the Fed. The Fed looks like they're going to have to raise rates again. That's ultimately the bottom line from the data. Now, the debt ceiling, this is also a situation that we are monitoring very closely, and it looks like the what is it called? The House Rules Committee did approve this to hit the floor. So it looks like we're going to get a vote on this that is scheduled for 8:30 p.m. today. Now, it should pass. This should just be over. But there is a chance that it's not, that this vote does not go through. You're seeing opposition is growing, as this headline says, to this debt ceiling deal. And one that especially would end student loan payment pause. And a lot of Democrats obviously are not liking that. So we'll see how that ultimately does hash out. I think the markets are kind of looking at this like it's a done deal. Now, why are the markets down pretty much 1% across the board? Russell 2000 is down 1.5%. I would say it's the JOLTS job openings, partly coming in hotter than expectations, but also you've seen a kind of sell the rumors or sell the news kind of event, buy the rumors, sell the news kind of event when it came down to the debt ceiling. The markets were down about 0.5% before any data even came out today. So you've seen people comment on this, you've seen people talk about this, and this happens often in like pharmaceutical companies, things like that, on a smaller individual stock kind of scale, where you buy the rumor, FDA approval, whatever it is, and then once that news comes out, the stock sells off. And that's kind of what's happening here in the markets today. The markets are selling off the news that the debt ceiling is going to be raised. So I don't know where this takes the markets from here. I think earnings and after hours are going to be important. AI is going to be another big focus. You're going to have CrowdStrike, Salesforce, C3 AI, Okta, Chewy, Nordstrom, Viva, Pure Storage, NetApp, and PVH. So, couple obviously AI kind of stocks that if they mention AI, if they have the right things to say, their stocks could go very high, and that could really continue the NASDAQ. And I think that's part of what is happening today. Stocks like NVIDIA are actually going down today. NVIDIA is down 3.29%. You haven't seen NVIDIA go down really in quite a while. So that is definitely, playing a role on the NASDAQ, what's happening here on the day today. So with all of that considered, how does this affect AMC? Well, obviously, the collateral is really concentrated in the top 5 to 10 names. The names that are actually down today, like a Microsoft, like an Apple, like a NVIDIA, like a Google, and Amazon, those are the guys that have the collateral behind the AMC short positions. They're the only stocks that are even eligible to be placed as collateral behind these positions because they are almost deemed as risk-free in this market environment. Whereas a lot of small and mid-cap stocks have been getting, beaten down, these names have done the opposite. These names have rallied, a lot of them over 100% from their lows. And this high quality collateral situation where just not any old stock can be placed for AMC collateral, actually that was a rule change back in 2022. So this is something that we've known about for a while, we've been tracking for a while, and you've just seen the markets get more and more concentrated as of recently. So this looks like a positive development in terms of actually getting, collateral being squeezed and to put pressure on short sellers. Now, number one thing I'll tell you as well with AMC, it's all in the option activity. Let's go ahead and pull up AMC stock here today, see what's going on with the options, give you guys an update on the short interest. So if we take a look at the options, no surpriser here. There's a lot of those $10 puts that are being bought yet again today. A couple orders I see right here worth about $300,000 a piece. 3 of them about $1 million plus $600,000 trade right there. You got a $1.5 million trade right there. All in all, it's causing market makers to have to go out and short AMC stock. I don't really think you're seeing a lot of pressure with hedge funds actually shorting shares. I think a lot of this downside pressure we've seen recently is market makers that are having to go out and short AMC because hedge funds are buying these deep in the money puts. And as the stock does go down, these deep in the money puts have a very low break even. So sometimes it's like 0.5%, 1%, 2% to break even. And the market makers, they have to short before that break even. So just minimal downside in AMC stock causes market makers to short. This is like a reverse gamma squeeze. We've talked about this before. Let's pull up the chart for a second. This looks like a gamma squeeze in reverse, right? If you were to look at AMC and just plot this exactly opposite, we go ahead, you've seen roughly a 26% decline from that $6 price. If AMC were to be doing something like this, this would look a little bit more like a gamma squeeze, right? Just the stock going higher. It's doing that in reverse, and that's how the options work. And the market makers, in this, specifically what they're doing right now is perfectly legal. That's what they're supposed to do. When they see lots of options being placed, they create a market, they go out and buy stock or short stock appropriately to hedge out their risk for holding those options. So long story short, what does a reverse gamma squeeze mean? Well, it means you're seeing a lot of shorting. And that ultimately means you could see some non-discretionary short covering by market makers if AMC stock can manage to go up. But as of recently, that has not been the case. AMC stock is down another 4% here today. And the next real level that you want to watch is kind of where we are right now, about $4.40 per share. You are at $4.46 per share. So right now is actually a pretty big level. to see a bounce. The RSI is almost at technically oversold levels, and the MACD is starting to go oversold as well. So some of the indicators of, hey, we should be seeing a bounce soon are definitely starting to show themselves. And it's been consecutive, right? Just like a gamma squeeze to an upside would be, it's been consecutive to the downside. So you're seeing that reverse gamma squeeze actually happening. It's been happening ever since you hit that high of, $6 per share back here on May 5th. And as far as Ortex, if we take a look at the short interest currently sitting at 21.25%. So it looks like it's actually going up a little bit from that level of about 20.5% that we were sitting at just a couple of days ago. So indicating a little bit more shorting, but the short interest dropped from 27% to 20.5%. That's a very big drop. It's just being replaced with the market maker shorts that don't get, picked up by the exchanges. It doesn't get captured as short interest. Now, if we take a look at the overview of the short interest with AMC stock, short score of 89, $508 million worth of short positions on AMC currently, 21.25% short interest of free float. Free float out on loan at 34.4%. The free float out on loan is actually going up a lot more in this recent bounce than the estimated short interest is. So there is a lot of shares out on loan that could be used against us at some point in the future. Shares out on loan, 177.62 million. Days to cover, 6.65. This is actually very bullish because the higher this days to cover gets, it's basically showing you that there has been low volume, and the lower volume you see, the harder it is for shorts to cover on their short positions. If they are forced to, or if they need to, that can just make a squeeze last longer and can make it go a lot higher. So there you have that. Cost to borrow, 3-month, looking at about 54.9%, 100% share utilization. Current cost to borrow fees, 66.11% for the cost to borrow average, cost to borrow max sitting at about 100%, cost to borrow minimum at 50%. And you're even seeing Interactive Brokers, the cost to borrow fees are jumping over here to about 65% here today, with about 300,000 shares that are currently available. So from my perspective here, you should be looking at a bounce pretty shortly with AMC stock. I think we're far overdue for that. And depending on how this bounce is, if it's aggressive, if it's not, if you do jump up considerably, you could see some indiscriminate, I should say, short covering by market makers. Just as the price goes up and down, market makers, they have to hedge out their positions. It's not like they have a vendetta against AMC, at least they shouldn't in theory. And if the stock goes up, they should be forced to buy back stock. If the stock goes down and people keep flooding into these deep in the money puts, they're going to have to keep shorting stock. And hedge funds are literally supplying those deep in the money puts very, very aggressively every day. Those are the puts that are being targeted and bought by institutions, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.